Imagine waking up tomorrow morning and checking your bank account to find that you made money while you were sleeping. You didn't work overtime. You didn't hustle on a side project. You literally just slept, and your account grew. Now imagine that happening every single day for the rest of your life. Money coming in whether you're working, on vacation, spending time with family, or doing absolutely nothing. That's what passive income through investing can do for you, and it's not some fantasy reserved for the ultra-wealthy. It's a real strategy that millions of regular people use too. Build financial freedom and eventually escape the 9-to-5 grind. But here's what nobody tells you. Creating passive income through investing isn't about getting rich quick or finding some secret stock that pays you thousands a month. It's about understanding a few simple concepts, making smart choices, and giving your investments time to grow. Today, I'm going to show you exactly how to create real passive income through investing, step by step, in a way that actually makes sense. Let's start by getting clear on what passive income actually means, because there's a lot of confusion about this. Passive income is money you earn without actively working for it. It's the opposite of your salary where you trade hours for dollars. With passive income, you set up systems or investments that generate money for you on an ongoing basis, even when you're not actively doing anything. Now, I need to be honest with you. Creating passive income does require work up front. You have to save money to invest. You have to learn how investing works. You have to make smart decisions about where to put your money. But once those investments are set up, they can generate income for years or decades with minimal effort from you. That's the passive part. You do the work once, and you get paid over and over again. There are several ways to create passive income through investing, and I'm going to walk you through the main ones that actually work for regular people. The first and probably most accessible form of passive income from investing is dividend income from stocks. When you own shares of a company, you're a part owner of that business. Some companies share their profits with shareholders by paying dividends, which are basically regular payments, usually quarterly, that get deposited directly into your account. Let me give you a concrete example. Let's say you buy shares of a company like Coca-Cola or Johnson & Johnson, which are known for paying steady dividends. If you own 100 shares of a stock that pays a 4% annual dividend, and each share is worth $100, you own $10,000 worth of stock. That 4% dividend means you'd receive $400 a year in dividend payments. It's paid out quarterly, so $100 every 3 months. You didn't have to do anything to earn that $400 except own the shares. That's passive income. Now, $400 a year might not sound life-changing, but here's where it gets interesting. First, you can reinvest those dividends to buy more shares, which then pay more dividends, which you reinvest to buy even more shares. This creates a compounding effect where your income grows exponentially over time. Second, as you continue adding money to your investments, buying more dividend-paying stocks, your dividend income grows. And third, many companies increase their dividends over time as their businesses grow. So your income from the same shares can go up year after year, even if you don't buy any more. Let me show you what this could look like over time. If you invest $500 a month into dividend-paying stocks with an average yield of 4%, and you reinvest all the dividends. After 10 years, you could have around $75,000 invested. That's generating about $3,000 a year in passive income. After 20 years, you could have over $200,000 generating $8,000 a year. After 30 years, you're looking at over $500,000 generating $20,000 or more annually in passive income. And remember, that's money coming to you whether you work or not. The key to dividend investing is choosing stable, reliable companies that have a history of paying and increasing dividends. These are usually well-established companies in industries like consumer goods, utilities, healthcare, and financial services. You're not looking for exciting startups or risky growth stocks. You're looking for boring, dependable businesses that generate consistent profits and share them with shareholders. There are also dividend-focused index funds and ETFs that let you own hundreds of dividend-paying stocks in one investment, giving you instant diversification and steady income. These funds typically have names like Dividend Aristocrats or High Dividend Yield, and they make it really easy for beginners to start generating dividend income without having to pick individual stocks. The second major way to create passive income through investing is through bonds and bond funds. A bond is essentially a loan you give to a government or a company, and they pay you interest on that loan. When you buy a bond, you're lending money, and in exchange, you receive regular interest payments, usually twice a year, until the bond matures and you get your initial investment back. Bonds are generally less risky than stocks, especially government bonds, and they provide predictable income. The trade-off is that the income is usually lower than what you might get from dividend stocks. A typical bond might pay 2 to 5% interest annually. For passive income, you can invest in bond funds or bond ETFs, which hold hundreds or thousands of bonds and pay you monthly income from all the interest those bonds generate. This is a particularly good option for people who want steady, reliable income with less volatility than stocks. The third way to generate passive income, and this is a big one, is through real estate investment trusts, or REITs. A REIT is a company that owns and operates income-producing real estate, like apartment buildings, office buildings, shopping centers, or warehouses. By law, REITs have to pay out at least 90% of their taxable income as dividends to shareholders, which means they tend to have very high dividend yields, often in the 5 to 8% range or even higher. When you invest in a REIT, you're essentially becoming a real estate investor without having to buy property, deal with tenants, fix toilets, or any of the headaches that come with being a landlord. You just own shares of the REIT, and you receive dividend income from all the rent and income the properties generate. You can buy individual REITs, or REIT index funds that give you exposure to hundreds of properties across different sectors. This is one of the easiest ways for beginners to get into real estate investing and start generating passive income. Now let me talk about how much passive income you can realistically generate and what it takes to get there. A lot of people have unrealistic expectations. They think they can invest $1,000 and start earning enough passive income to quit their job. That's not how it works. Generating meaningful passive income takes time and requires building up a substantial investment portfolio. Here's a rough framework to help you set realistic goals. If you want to generate $1,000 a month in passive income, which is $12,000 a year, and you're targeting an average yield of 4% from dividends and interest, you'd need a portfolio of about $300,000. For $2,000 a month, you'd need $600,000. To replace a full-time income of, say, $5,000 a month, you'd need around $1.5 million invested. Those numbers might sound impossible, but remember, you don't have to build that all at once. This is a long-term game. If you start investing $500 a month at age 30, and your investments grow at an average of 8% annually, including dividends and capital appreciation, by age 60, you could have over $700,000, generating substantial passive income. The key is to start early, invest consistently, and let compound growth do the heavy lifting. Even if you can't invest $500 a month right now, start with whatever you can. $100 a month consistently invested is better than nothing. As your income grows over your career, you can increase how much you invest, accelerating your path to meaningful passive income. Let me address some common mistakes people make when trying to create passive income through investing. The first mistake is chasing high yields without understanding the risk. You might see a stock or investment paying a 10 or 12% dividend and think that's amazing. But often extremely high yields are a red flag. They might indicate the company is in trouble or the dividend is unsustainable and likely to be cut. When a dividend gets cut, not only does your income drop, but the stock price usually crashes too, so you lose on both ends. Stick with reasonable, sustainable yields in the 3 to 6% range from quality companies or funds. The second mistake is not diversifying. If you put all your money into 1 or 2 dividend stocks and one of them cuts its dividend, you're in trouble. Spread your money across many different investments, different sectors, and different types of income investments like stocks, bonds, and REITs. This protects you if any single investment runs into problems. The third mistake is ignoring taxes. Different types of investment income are taxed differently. This can significantly impact how much passive income you actually get to keep. Qualified dividends from stocks are taxed at lower capital gains rates, which is good. Interest from bonds is taxed as ordinary income at your regular tax rate, which is usually higher. REIT dividends are also mostly taxed as ordinary income. This is why it's smart to hold different investments in different types of accounts. In a tax-advantaged retirement account, like a Roth IRA, your income grows tax-free, so it makes sense to hold investments that generate a lot of taxable income, like bonds and REITs, in those accounts. In your regular taxable accounts, you might focus more on qualified dividend stocks that get better tax treatment. I'm not a tax advisor, but understanding the tax implications of your passive income investments is important. And you might want to consult with a professional about your specific situation. Let me give you a step-by-step strategy for building passive income through investing. First, make sure you have your financial foundation in place. This means an emergency fund of 3 to 6 months of expenses in a savings account and any high-interest debt paid off or under control. Can't build wealth through investing if you're paying 18% interest on credit card debt. Second, take advantage of any employer retirement match in your 401k. That's free money and an instant return you can't beat anywhere else. Third, open an investment account specifically for building passive income. This could be a Roth IRA if you're eligible, or a regular taxable brokerage account. Fourth, decide on your passive income strategy. Are you going to focus on dividend stocks, bonds, REITs, or a mix of all three? For most beginners, I'd recommend a diversified approach using low-cost index funds and ETFs that focus on dividends and income. Fifth, set up automatic monthly investments. This is crucial. Decide how much you can invest every month, even if it's just $50 or $100, and set up automatic transfers from your checking account to your investment account. Then set up automatic purchases of your chosen funds. This removes emotion from the equation and ensures you're consistently building your passive income portfolio. Sixth, reinvest all your dividends and interest in the early years. Don't take the income out and spend it. Let it compound and grow your portfolio faster. Eventually, once your portfolio is large enough that the passive income is meaningful, you can start using it to supplement your regular income or even live off it entirely. Seventh, be patient and stay consistent. Building passive income takes years, not months. There will be market downturns where your account balance drops. Don't panic and sell. Stay the course, keep investing, and remember, you're building income for decades from now, not next week. Let me share a real example to make this concrete. Let's say you're 30 years old and you commit to building passive income. Start investing $400 a month into a mix of dividend stocks through a dividend index fund, a bond fund, and a REIT fund. Your average yield is about 4%, and your portfolio also grows from capital appreciation. In the first year, you invest $4,800, and at the end of the year, your portfolio might be worth around $5,000, generating about $200 a year in passive income, or about $17 a month.
Oh yeah.
Not exciting yet, but you're building the foundation. After 5 years of consistent investing, you've put in $24,000, your portfolio has grown to around $30,000. And you're generating $1,200 a year in passive income, or $100 a month. Still not life-changing, but you can see the progress. After 10 years, you've invested $48,000. Your portfolio is worth around $75,000. You're earning $3,000 a year, $250 a month. After 20 years, you've invested $96,000. But your portfolio is worth over $250,000 thanks to compound growth. And you're generating $10,000 a year in passive income, over $800 a month. After 30 years at age 60, you've invested $144,000 of your own money. But your portfolio is worth over $650,000, and it's generating over $26,000 a year in passive income. It's more than $2,000 a month, and that's not even counting Social Security or other retirement savings. That passive income could very well cover most of your living expenses in retirement, giving you financial freedom. Before we wrap up, I need to remind you that everything I've shared in this video is for educational purposes only, and not financial advice. I'm not a licensed financial advisor, and your personal situation is unique. You should do your own research and consider consulting with professionals before making investment decisions. Passive income through investing is a powerful wealth-building strategy, but it comes with risks, and I want you to make informed decisions. So here's what I want you to take away from this. Creating passive income through investing is absolutely possible for regular people. You don't need to be rich to start. You can begin with small amounts and build over time. The main strategies are dividend-paying stocks, bonds, and REITs, or better yet, low-cost funds that hold all of these. The key is to start early, invest consistently, reinvest your income in the early years to accelerate growth. Diversify across different types of income investments and be patient. This is a long-term game, measured in decades, not days. But if you stick with it, you can build a portfolio that generates real, meaningful passive income that gives you financial security and freedom. Imagine not having to worry about losing your job because you have thousands of dollars a month coming in from investments. Imagine being able to retire early because your passive income covers your expenses. That's the power of this strategy, and it's available to you starting today. If this video opened your eyes to how passive income through investing actually works and motivated you to start building your own income streams, I'd really appreciate it if you hit the like button. And if you want to keep learning about investing, building wealth, and achieving financial freedom, subscribe to the channel. In the next video, I'm going to show you the exact funds and investments I recommend for beginners who want to start generating passive income, with specific ticker symbols and strategies. Thanks so much for watching, and I'll see you in the next one.